Hi, everyone. Welcome to Analyze Your Trade, episode number 31 for April 17th, 2018. Tonight, we will be discussing your trade ideas. So over the last few days, about 30 people submitted up to 5 symbols each. And I put a list together, which you should see on your screen right now while I'm talking. My name is David Cosworther. I'm the creator of Timing Research, and I developed this show with Dean Jenkins of Follow Me Trades. But he is off this week as moderator, and I have Michael Filighera here again to moderate, so I'm going to go ahead and turn it over to him.
Thank you, David, and good afternoon, everybody. Good evening, however it is by where you live. We should have a pretty good show going today. We've increased the number of trader/analysts that we've had in the past. We now have 4, plus myself. So we have Evan McDaniel, we have Kenney, Roy Swanson, and AJ Brown. Now, yes, AJ. And the order that we'll go in will be AJ, Evan, Jim, and then Roy, and then myself. What I'd like to do first is we'll begin again with you, AJ, and we'll just kind of go down the row and just kind of give a brief introduction of who you are and what you do.
Hey guys, I'm AJ Brown, and I'm the founder of a group called Trading Trainer. We've been in doing education and helping people with tools and things like that since 2003. We've got about 4 or 5 different programs running out of Trading Trainer. Right now, my favorite program is our premium selling program. That works really well with what the market's doing right this minute. And other than that, I'm looking forward to a fun show.
And thank you very much. Evan.
How are you doing? So my name is Evan McDaniel. I'm the founder of Hedge Accordingly. And we started in trading, or I started in trading in around 2005. Started a website called Trade for Profit, which kind of merged into Hedge Accordingly. And I focus on the futures markets and more of a higher elevation view of trading versus micro trading.
Cool.
And, I've moved from an options trader to almost exclusively futures trading.
And thank you. We're going to have a lot to talk about. Jim.
Yeah, I provide the content over at optionprofessor.com, and basically an education firm that deals with the uses and the risks of the option strategies. Everything ranging from beginner, intermediate, and advanced strategies, things such as cash flow creating strategies, as well as limited risk speculation, as well as hedging using collars and married puts. So lots to learn, and that's what's on the DVDs.
And thank you very much. And then Roy.
Hey, Roy Swanson. I'm the founder of Steady Trader. We're pretty much classical trend traders, short-term trends though, anything up to 5 days. We look to trade stocks that are moving up, get in and get out quickly, take a few points, and call it a day. But just do that over and over again. It's kind of a volume-based strategy.
Sort of like wash, rinse, repeat, huh?
That's right.
There you go. I like it. I'm Michael Filighera. I am the originator, the owner, the starter of LogicalSignals.com. In the past, I've had trade rooms. At the moment, I'm kind of just making some decisions as to what direction we're taking the whole thing. And in the process, I have helped one of my former room members start her own room. And that's where I am spending my time and helping to develop that and make it very profitable. And what we're really working on is helping those that are either considering themselves underfunded or they're starting with a smaller account. And similar to Evan, I was an options market maker here in San Francisco. I've also traded in London. I've traded in Amsterdam, Germany, coming back to San Francisco. When the floor started to thin out and basically closed down, I left the floor, of course, and then came back here to my home. And I have now switched over to trading futures. So I said, Evan, you and I probably have a lot to talk about. But anyway, we're going to talk about stocks now. And we're going to begin with Newmont Mining. So again, we'll keep that same order. And we'll just kind of go down the row. And if you don't have any clues or you don't really follow what stock we're going to talk about, that's perfectly fine. Just kind of say, you know, that's not something that you trade or that you are aware of. And then we'll just keep moving down the line, see how far we can get through this list. Let's begin with Newmont. And AJ, you're up.
What I like about Newmont, and I was looking at this a little bit earlier yesterday, is that it's been in a sideways channel. So I like to use what I call fractal patterns periodically, which means taking a look at 6-month daily chart, comparing it to 2-year weekly charts, comparing it to 10-year monthly charts. And I like that this one goes sideways. And I like that it's sideways with some sort of breadth to its channel width, because what that tells me is that this is a fantastic one to sell some premium against. Buy something like, for instance, right now we're at a top. So why not buy a back month put, kind of deeper in the money, farther out in time? And then as we get closer and bottoming out around $37, if that's what happens, then we can sell a put against that back month put and just run ourselves a nice diagonal and keep making premium against that back month option. That's my knee-jerk reaction with Newmont Mining.
Great. Thank you. Evan, you're muted. You're muted, Evan.
Sorry about that. What I'm looking at Newmont here, if I can get my screen share, if that's possible. Application window, if that's up.
Yep, you can see it.
Okay, so I don't really follow this too much, but I'm more of a technical trader, and looking at this right here on this is a 4-hour chart, so this is essentially the beginning of the year. We had the dollar coming down here in purple, and so I'm guessing if the dollar were to break down in this direction, weaken, it looks as if Newmont's going over 42, which was the year high, moving higher. I guess this is kind of a proxy for gold in general. So that's really my thoughts there technically, and it looks like it it wants to move in this direction towards 45.
Okay, Jim.
Newmont, obviously a gold stock, and I'm just looking at the technicals on it as I would read the tea leaves here. It does look like it's picking up a little bit of steam here. The 50-day volume is just under 6 million shares a day, and the 200-day volume is about 5 million shares a day. So it's about a 20% increase in volume. That's not a negative with the prices rising. And then you've got the moving averages, 50-day at 38.5 ballpark and the 200-day at 37.25 ballpark. So they've crossed, and that's a good thing. Company's not making a whole lot of money now, which is not a great thing. But I do think that it's probably getting a bit in here because people are seeing, their gas prices are up maybe 20%. Well, in my area, they're up about 20% year over year. They're seeing that the dollar is kind of hanging around this 89 area. And if it were to break under 89, 88, that could be problematic. They're looking at the Fed in an interest rate rising mode. And there used to be an old adage, when interest rates bottom, gold bottoms, and when interest rates top, gold tops. And maybe that adage, which is old, will come back and be new again. So we'll have to see. But clearly, the 37 area, 38 area would be a nice place for it to hold. And like the other gentleman was saying, if we break above 42, you could get some action there.
Good, great. And Roy.
Okay, yeah, can you hear me?
I can.
Okay, great. Yeah, this one I actually liked. I use a combination of 4 indicators, all technicals. A couple are Wilders, the DX and the ADX3, the RMO, which is an oscillator, and the OBV, which shows if money's flowing in just on the order book. Really classic stuff. Newmark hit on 3 of those, so that's good enough for me. I think as a near-term trade, that could be good. I should explain that we never hold positions for more than 5 days, 1 to 5 days. So I have a very short-term orientation. It's either going to move quickly or I'm not interested, and that's what my stance is set up to identify. So that said, these predictions come up to target, and I'd want to see Newmark hit 41.84 thereabouts tomorrow to get into it.
Okay. And thank you. And being a gold bug and have been for many, many years. Newmont was always on my radar and my trade screen. At the moment, I have lost touch with what it costs Newmont to get an ounce of gold out of the ground. And that really, if you're really going to play Newmont mining and you're going to play it in conjunction with gold, then you have to have an understanding of what it costs this company to actually mine that gold. If gold prices continue to advance, then of course they're going to be in good shape, unless their cost is, you know, $1,500 or whatever their cost may be to get that out of the ground and to get it, you know, processed. Technically, I think that, again, it's pushed up against 42, did not go through it a couple days ago. That begins to signal that it could be ready to just kind of do a little bit of a pullback. Now, the entire move from the low at 36 back in February just does not seem bullish to me. It seems more corrective. Having said that, it just appears that we still, within this larger move, which started off of that 42 high back in January, has an additional down leg to do. Now, pre that down leg beginning, there is a higher probability that the stock will make a little head fake above 42, kind of maybe pull everybody in that it can, and then reverse. And that would not surprise me at all, because the market's been tending to do that. I think I'm going to, you know, as far as trades, I think if you're long the stock, you're going to want to protect it by sticking a put or 1 or 2 or 3, however many you need underneath it. But I really like AJ's play, because AJ and I are both premium sellers. And so you have to figure out how you're going to be able to sell premium with the particular move that's going to happen. Since we feel that this move is going to be down.
Oh, looks like he.
And going to your month and trading that way, you know, just going, you know, hedging against that. But I do think there's a little bit more upside left to it, and I don't think much above 42. A strong enough break above 42, then I'm going to go with what Evan was saying, and then we could start to take off. But you're going to have to see a stronger rally in gold for it to do that. Going on to our next stock, it could be many people's favorites, and it's Microsoft. So AJ, we're going to start again with you.
All right, so Microsoft has a nice long-term trend, but just like most everything that happened in about the middle of January, started to go sideways, and now we're again testing this level of resistance that was established around $96. Now, again, I'm always going to be jumping towards, at least at this point, since the whole broad market is going that way, to kind of figure out where we might sell some premium. But this one needs to mature before we do that. In other words, this top needs to be established and found, and it needs to be heading back down. It can't, you know, the other way I would trade it is I would definitely trade it as a short-term trend in the upward direction. So I can't trade it tomorrow. I can't probably trade it at all this week until it establishes, is 96 the top, and we're going to go down. If so, I'm going to sell premium against it. If it's going to break up above 96 and stay above 96, well, then I'm going to figure out a way to trade the trend. But I have a lot of faith in the fundamentals of Microsoft, but fundamentals are so disconnected from what stock charts are doing these days. You got to just play the chart as it matures, and this one needs to mature for me to go any further on it.
Okay. Evan.
So I got Microsoft's chart up here, the daily, and as you can see, it's kind of consolidating at its resistance. So I believe this is its recent all-time high post-split. So I would assume, you know, based on technicals, this resistance level is probably, we may break out a little bit, but come back down, hit the channel, and then at some point in 2000, maybe in the summer 2018, we break out to the upside. So, you know, if you are selling premium, you know, wouldn't probably hurt selling, you know, 100 to own something a little bit lower to capture give yourself some time and to capture some upside here. But I do think on the macro scale, based on the chart, this thing is probably going to go lower back towards 91, 92, and then move on up to 100. And Bill Gates and Jeff Bezos will once again be competing for who's the richest in the world.
Yeah.
So that's what I got from Microsoft.
Yeah, I'm not so sure that's really a challenge between the two of them as much as it might be just us market players.
Right.
But thank you very much.
Yep.
And Jim.
Yeah, this has been a freight train here since January of 2017. Just moving up. Volume is confirming a lot of activity here. 50-day volume is 35 million shares a day. 200-day volume average 25 million. So it's a pretty big money coming in here as far as volume is concerned. From its 200-day average, it's about 15% above, which is a little bit overbought. But I would say that this is probably going to be mimicking whatever the S&P does. Now, if you're a believer that the S&P is running into resistance here between 2,700 and 2,750 and is going to roll back down, then this stock may only go a bit higher and then roll down as well. But if we're going to blow through 2,730, 2,750 and really get on the horse, then this thing has all the prerequisites to being one of the top stocks on a breakout to the upside on the S&P. So it's probably going to live and die by the S&P sword in the short run.
I like that, the S&P sword, and a mighty sword it can be. And Roy.
Yeah, I'm not seeing any movement in this, at least according to my indicators for the next 1 to 5 days. And that's typical. I mean, we often don't get involved in some of these heavy stocks like Microsoft because they just don't move quickly enough.
Okay. Personally, I think that the sideways move that we've seen now from January, early February, continuing now into April, is reaching its pinnacle. And I agree with what Jim said, that Microsoft lives and dies by what happens to the S&P and also the NASDAQ 100. So I think that there's too many indexes where Microsoft is a very important player or a larger player in the pricing of that index, particularly the NASDAQ 100, the triple Q. I think that a lot of them just really will put more control onto what this stock does. I think very short term, like the next couple of days, we might see the stock make an attempt to equate 97.24, 97.25, may even eke a little bit above it. But I don't consider this move that's really coming off of the end of March from 87.5 to now, even though it's $9, I do not consider it a bullish move at all. I think it's very corrective. I think it's totally sideways. And to me, the move that follows something like this is a revisit of 87.5, if not a revisit below 85. Now that, who knows how long that's going to take. And obviously it's not going to be kicked in because Microsoft is going to have putrid earnings. I don't know that for certain, but who knows? I think there's going to be an outside, a general market knockdown that'll just, Microsoft will have to go along. So again, I'd be looking to, if I'm in the stock, I'm going to look to try and do not want to sell the stock. Then I'm going to try to protect some of what I've got by hedging it out with some puts, like many of these stocks. You need to be able to ride out, an 8, 9, 10 point decline in the stock, if indeed it's going to turn along with these indexes. Next on our list is SKX, Skechers.
All right.
I personally like the shoe, but I've never traded the stock. So, AJ, you're up.
I've never traded Skechers as well, and you stole my thunder there because I do like to wear their shoes. So we've had a stall. There's a lot of correlation going on with the big three indexes and their sideways movement, and this is just falling right in line with that. And we're at a top again. This top is looking like it's been a little bit more tested, but in my mind, still not mature enough to decide whether this is range contraction and we're going to keep going up, or whether I'm going to wait for a top and see it start to go down Again, my thing when I'm at a top is I want to sell a back month put. I mean, buy a back month put. And then as I get to the bottom, what I'll wind up doing is selling a near term put, and at the same time, buying myself an out of the money call option above resistance, usually 1 month out. So it's kind of like a little collar that I've created there. And there's been a lot of premium with the implied vols being so high. So the economics of that actually work. But again, this is one of those ones that I just don't see the maturity as of today. Maybe by the end of the week, I'll have an answer to my question. But for this one, I'm not ready to trade it tomorrow.
Thank you very much, Evan.
But I will buy the shoes.
Yeah, this is a stock I don't really look at too much. But echoing the prior sentiment, it is moving sideways. It looks like it's had quite a bit of a move here since the beginning of April, running out of steam up here, kind of looking like a lot of stocks. So, this thing might come back in towards 40 and present a base if you want to get in. But it really looks like it's waiting for some news, perhaps. I don't really follow it, but it looks like it'll move down. But the general trend looks like it is higher. But micro speaking, probably sees 40 or 38 before 45. And that's my thoughts there.
Okay, thank you very much.
Yep.
And Jim.
Well, I look at this, and it looks like the volume might be drying up. The 50-day average volume, 2.2 million shares a day, and the 200-day is 2.4 million shares a day. I'm looking at a 200-day average at 33, and the stock's up at 43, so that's like 30% above its 200-day average. My feeling when they get 30% or better above their moving average, no matter what the name, they're vulnerable to a drop. And there is a huge gap from Q4 last year between 25 and 30, never been filled. And so if this thing got any news that was not positive, and it broke under 40, I think that could be the double whammy on this stock. And I would be careful that it's susceptible to a pullback because of the distance between the current price and the 200-day average.
Very well stated. Thank you. And Roy.
Yeah,
Roy?
I like Skechers. I like it. It's triggered on my DX, it's triggered on my DX3 and on my OBV. So 3 out of 4 indicators I'm in. Target for tomorrow would be about 42.83.
42.83. Okay.
Somewhere in there, yeah. Give or take a penny.
Yeah, I'm holding to it. Anything else?
No, that's it. Like I say, I go by my indicators, and if I get at least 2 out of the 4 to trigger, I'm usually pretty good as long as they hit my target for the next day. I like to see them go up the next day to keep proving the trend.
There you go. Okay, much appreciated. For myself, again, I've never traded Skechers, but I'm taking a look at a daily chart, and I think that what becomes most notable to me is that the momentum is waning as this thing shoots up and continues to try to make additional new highs above 43.08. The momentum is just caving. Now that suggests to me that is not going to last. I think we're going to pull back in. I think our first line of defense is going to be 42, but I think it's going to be very light. And basically it's because for the last 3 days, that's kind of held, 4 days actually, that's held any selling. But I think if 42 breaks, we will see 40. If 40 breaks, then again, you just got to take $2 more, and then we're at least going to see 38. And I think that eventually that the stock does bottom out below 38, and then we begin the next rally. So it depends on how long it takes. If we consider that it's really only taken a week, about a week and a half for it to get where it is from 38-ish, I could go back there just as quickly. But as far as trading the stock, I would, if you're long up above here, then you really need to put a stop in. And if you're not, and you're long from lower levels, then you also just have to realize how much you're willing to risk in any type of a pullback. So you might want to get out and then get back in when it's all done. We're going to do one more, and then we'll do a round robin of some additional things. And let's take a quick look at advanced micro devices. Everybody's stock that they love to hate.
Well, I got to tell you that I am actually doing some trades on this. I'm actually going to share my screen, and I'll tell you why.
Okay.
Because I'm enjoying what's happening with AMD right now. So first thing is as I've pointed out to you guys, I really like sideways channelers right now, and I like that the market's going that way. I like that there's a little bit more hedging going on, and so that means my option premiums are up. But take a look. This is a 6-month daily chart, and you can see that we have an established support and resistance line that we've been testing. But if I take a look at a 2-year weekly chart, you'll see that this has been the same support and resistance that's been since the beginning of 2016. And I really like that. I like sideways movers that go under the radar, that it doesn't matter what's being tweeted or anything like that, that we just keep going sideways, right? When you do see, you can see some of the excitement that's happened around AMD. When you look at a 10-year monthly chart, you've had some pluses and minuses with product launches. But since 2016, we've been in this same channel, which means I waited. Again, I like to wait for the tops and the bottoms to really mature. And here's the second reason why I really like it. If you take a look at the liquidity of far out in time options, like the January 2019, we have so much open interest, even on some of the deep in the money options, that what I did just last Thursday is not only did I buy quite a few shares of AMD itself for around $10 a share, but I also bought a whole bunch of January 2019 $5 calls. And the reason why is because I'm going to be selling premium against all of that. The shares that I bought in lots of 100 and the call contracts, I'll be selling call contracts once the price probably tops out up here around 1275 or something like that. And I'll be going near term. And like I said, the other little thing that I like to do is when price is up here and I'm selling the premium against it, I'll also buy, if say for instance, I'm selling the June premium by the time it tops out, wherever it tops out in this little column, I'll probably also be buying whatever that month is plus a month, put protection maybe around $9.50, whatever option strike price I can get down there, just as some extra frosting on the cake.
And Evan, Advanced Micro.
Well, again, not something I'm looking at, but looking at that longer time frame that we were just looking at, it actually is, as it is at the lower end of that channel here, it's bunched up against this downtrend line. Looks like it, it might want to jump over. There's buyers at 10, bunched up at 1050. Looks like it could pop over 1050 and head over into this range between 11 and 12 in the next perhaps month or so. I think it's curious with AMD in regards to Apple producing their own chips and Intel kind of changing gears and all that stuff. So I like AMD. It's kind of had a rough go at it, and it could see an updraft with the market, independent of the market, rather.
I agree.
That's about what I got there.
It's a stunner.
Yeah.
Jim.
Well, the two things that I can see that I'm watching here is that if you look at a weekly graph going back to January 2017, this thing's been in a ballpark trading range of 15 and 10. So obviously, since we're coming out of the bottom area of that range, that would make the buy side a little bit interesting. And then the short interest is almost 20% of the stock, which means you got plenty of people to lift those hedges if they felt like it was going to make a turn. That creates a pretty good vacuum of buying in some instances. And so the fact that it's coming off of that base of where it was trading range going back, a little while here, and that short interest, could let it go back the other way. Seems like resistance could be right ahead of you, though, at 11 and 12. So I don't know how far it's going to go. But if it stays in the range it's been in since January 17, 10 and 15, there could be some juice on the upside.
Agreed. And Roy?
Yeah, I'm not seeing a move, at least for me, on this one. It's just didn't trigger my indicators. In fact, it's sort of triggered negatively on the RMO. So
you're staying away from this,
at least for the next 5 days.
At least for the next 5 days. I love it. For myself, I'm agreeing with the range. I think this thing's stuck in a range, and if you're feeling the same way, you need to get a hold of AJ, because AJ's how he wants to trade it is really very good. I like it a lot. But then again, I've liked a lot of AJ's trades. And so great thinking on that one, AJ. And I definitely would get in touch with him, because you're going to want to know how to trade this and to keep your revenue coming in a positive fashion rather than giving it back. If you're just a plain stock trader, hopefully you picked it up maybe off the low. The weekly shows that it's got a lot more room to the upside, but when I bring it down to the daily's kind of beginning to edge itself into overbought, because this, it's done well, coming off of $9, getting up to 10.5. That takes a lot of pushing. But same pattern. I don't think it's a really bullish pattern, and I think it's more completing, and now we run a risk of it. In this case, this is going to drop back down to 10, maybe 9.5. So I don't think a whole lot of damage can be done to the stock. So therefore, I would stick with basically what AJ's presented to us in terms of how to kind of trade that range-bound stock, and that's all I got to say, because I don't see for myself, similar to Roy, I don't see any trades that I would do in this.
Yeah, the one last thing, the 50-day moving average is just above 11, and the 200-day average is just at around 12. So those moving averages are right above where we are. So that would make it a little bit dicey as far as how far it's going to go.
It's just boring.
Yeah.
I like that.
But it was up 4% today, so it's not that boring.
Truth.
Right. And it could go up again 4% tomorrow. Depends on really what the broader markets are going to do, and test that 50-day.
The cheap stock.
Well, and then reverse off with the 50-day if it can't break through it.
If you're a trend trader, though, there is definitely lower hanging fruit than AMD.
Thank you very much. Good to know. Right now, though, let's do a round robin. And what we want to talk about is if there's a specific trade, a favorite trade that you might have that you would like to share with the folks that have come in today. So we're going to begin with AJ.
Well, so this trade is one that I discussed with my learning community program participants. These are my folks that are not as much investors in premium like I've been talking about all day, but more of the option traders that come to me. And I'm going to share my screen here. The one that we reviewed and both all got very excited about last evening was Anheuser-Busch. Some good old-fashioned beer. And this thing did exactly like we had expected when it bottomed out here, and it's testing a bottom and showing us. But if you're familiar with the option strategy, Condor, if you're in a cash account, or an Iron Condor if you're in a margin account, that's what we're throwing on here with some strike prices, 95 to 100 and 115 to 120, just for a nice May expiration. In the next 30 days, or something more like about, I think it's 3, 4, so total of 20, 25 trading days, and it's paying something like 35% ROI. So just watching the time pass by, checking in every evening, that's the trade du jour for AJ Brown.
Thank you, AJ. Evan.
Well, I'm going to be a little bit more general, more broad. I'm looking here. This is the NASDAQ future. And I like to draw lines, not so much to mine them, just to give me an idea of where the price has gone, where it may go, where it may get hung up. And so what I find interesting currently is, so we had a squeeze at least since Friday until today. Today we had quite a move here. So essentially we bridged the gap between 6,700 and now we're at 6,831. We've come a long way, but we've been at junctures like this before where we think we've moved too far to the upside. It's going to come back down. But what has me, curious is the dollar's been moving sideways. And in the past, if you look over here, a weak dollar sometimes translates into upside. And then when the dollar gains footing, so does the market. And so as the dollar's remained weak, say at the under the 90 level for the last couple of months, the market has come off its highs considerably. And now that the dollar has kind of picked itself up, but it's still under 90, the market's starting to react again. So, gun to my head, we're going to end up near 7,000 this week. It may not be tomorrow. Maybe it's Friday. But I think it'd be healthy to see a little bit of give back before pushing higher. And a lot of this is based on, say, Apple. Apple broke out over 175 yesterday, held, and it kept moving today. Netflix did well. So sentiment speaking, 35,000 feet view, it seems like we're going higher, at least in the interim. That's what I got.
Okay, thank you very much. And Jim?
Yeah, I was looking a little bit more at the S&P 500, and I think by Thursday we're going to have some pretty good idea of what's happening, possibly. My feeling when we went up to 2,900 ballpark on the S&P is it was about 400 points above its 200-day average. It was way extended, and the likelihood of a big break was increasing by the day. Obviously, we got a big break in February. After you get that kind of a big break, my feeling is that you can go in a trading range. And now the trading range was around 2,800 on the upside and about 2,530 on the downside. I think that range is getting tighter now. So now we're at 2,580, I think, as a floor. And we are, I think, almost hitting a potential ceiling right here because we filled a gap right around this 2,700 to 2,730 ballpark area. I'm looking at the transports closing down today. I'm looking at the VIX being down to 15 and the trading range on the VIX being 25 and 15. So we're at the lower end of the trading range there. And I'm looking at a stock like Goldman Sachs going up on big earnings and then closing way down. And the other banks look like they're not exactly going through the roof either. So, the banks look like they're, having some issues. The transports look like they might be having some issues. The VIX is down towards the lower area. And we are, in my view, near a resistance zone between 2,700, 2,750 ballpark area. By Thursday, if we were to start rolling over, I think that the rollover could be, pretty good size. Conversely, if we blow through 2,750 and these guys, that are talking about these apples and stuff going through the roof, then, it's going to be happy days are here again. But right now, because of the VIX being where it is, because of the transports, because of the action on Goldman and the other banks, and the fact that there was a gap there that got filled in, I'm a little bit suspicious going into Thursday. So by Thursday, Friday, I'd have a better idea if this thing is running into a rollover period, or if in fact, it's blue skies and green lights again.
Great, thank you very much, Roy.
Okay, hi. You wanted a favorite stock for tomorrow? I've got Rayonier Advanced Materials, RYAM. It's triggered on all my indicators, the DX, the ARMO, the ADX3, OBV. It's just a trifecta for me. So I'm good with that. It's, let me give you a target on that. Hold on.
Please.
I didn't look at that yet. It closed at 2231.
What was the ticker?
RYAM.
RYAM.
Oh, cool.
And
definitely have momentum today.
And I'm getting the target. Hold on, I just one more
Okay.
calculation. But we love technology,
don't we?
Yeah, so I think if it hits around 22.55, we're good to get in. And it had a good day today, and I was just looking at the media on it. Some hedge fund guy said it's going to triple, so there you go. That's better than all my indicators, right?
And the volume's been pretty strong lately too, huh?
Yeah.
So you're not you're not in the party of one on this one.
No, I've had some other, I'm familiar with this one. I've had a couple good trades on it already this year, so.
Yeah, yeah.
Good.
Is there news on it? Is there news on it at all, or you don't really care?
I look for, I do look at news. It's the last thing I look at, but I look for very, very hard news like divestitures, lawsuits, things that can really push the stock one way or another. I don't listen to pundits or, somebody was upgraded by somebody. I mean, that stuff is just not for me.
They have earnings coming out, or?
Not sure about that.
Maybe something's going on there.
I think they just did declare a dividend, but
well, I'm going to go ahead and move on, and then maybe you guys can we'll fill that in a minute or two. Trades, as far as I see them right now, I am a big volatility player, similar to AJ. AJ's a premium seller. That's volatility, and with volatility getting knocked down to 15. And again, as was previously stated, it's now got this range of 25 to 15 going. I think that when I looked at it and I saw it today, I thought, oh, it's going to make sense to why they were pumping higher. You had some volatility options that expired today. And so obviously there was a bunch of people that were likely short, and they weren't going to have it any other way. So they just pushed hard enough and they got what they wanted. I, however, think that it's just about time for volatility to rear its ugly head and scream higher, catching everybody that just got short or got short in the last week and a half. So my trade is in volatility, and I like to use spreads. And so I would go and start looking at call spreads and put spreads and go about that way. And I would actually start by looking at the May 18th expiration. You got to give yourself a little bit of time so that whatever is in process now can finish up, and then the next one will start. If you give yourself too short of a time frame, you're going to miss the move, and a lot of the premium, a lot of the volatility has already been knocked out of those options. So you need to keep going out a little bit further so you can capture a little bit more. So I'd be looking in May. I'd be looking at some call spreads and some put spreads. You could look at an iron condor if you think you can peg what you think it's going to do. In this case, 25 top, 15 bottom, or even 14, or whatever that low was, 13 something, I think, back at the end of February. And you could just box it off. And that's going to be my trade idea. So let's see how many more of these we can get done. And then we will do, again, our round robin on just who we are. Next up, we have Home Depot. Kind of used to be everyone's little favorite. Now it's kind of, I don't know if it's fallen out of favor. I'm not sure. I don't trade the stock. So that's okay. We decline that call. Home Depot, starting with AJ.
Home Depot looks like it's in a consolidation as far as I'm concerned, which tells me that maybe with whatever event is coming up, I haven't traded this one probably in about a year or so, but whatever event's coming on, I'd look up in the event calendar if there's an earnings being released anytime soon, if there's a news story, something. I'd be looking for some sort of spike up or down. I don't know which direction. If I was an option trader, I'd look to see if other people are already thinking that. If not, I'd try to buy into that premium while it's still low, straddle or strangle, and play it that way. But I don't have the experience, but it just looks like it's consolidating and ready to pop in one direction or the other on the littlest fuse.
Well stated. And Evan.
All right. Well, another stock I don't look too much at, but with the news. Was it Lowe's CEO stepping down? I know there's a lot of competition in this space, but looking at the chart on the 4-hour, echoing prior thoughts, it is looking like it's consolidating. It's just been getting smushed off this all-time high from January, but it does look like it's being constructive off of 170. I don't know if you want to draw a line like this, and it's putting in a series of lower highs, which could be adding pressure for it to swing down and perhaps head itself down to 165 or so. But beyond that, what I do think the upside, if we were to break out of this, would be more violent than it breaking down, because I think there's less downside than there is upside. It's just a matter of timing on this name. And that's what I got there.
And I agree with you. And Jim?
Well, this is another one that kind of fits into that mold of when you get too far away from your long-term averages, you're coming down no matter what the name is. Mm-hmm. And Home Depot went up towards 210, and its moving average was in the 160, 170 range. And so that was about 20, 25% above the moving average. And for whatever reason, they've now taken it back down to the moving averages, which 200 days at 171 and the 50 days at 180. So obviously you're into some support, I think, down here, and the volume has been pretty increased about, not that much really, though, about 10% higher on a 50-day basis. So the volume was higher than it has been on this drop. If you're a believer in the economy, if you're a believer, in real estate and all the stuff that they do, then obviously this is a place to take a bite and put a stop in there, or put some kind of a put in there as a hedge or something, and see if you will resume. Happy days are here again. But if you've been waiting to buy something on a big dip, you just got a $40 drop almost. And, if you're a believer, then this would be a decent value down here. But like anything, you got to put some kind of a mechanism in there to see if you can hedge the risk a little bit.
Right. Okay. And Roy?
I'm a believer.
You're a believer. Yay!
I'm a believer. No, but really, Home Depot triggered a couple of my indicators. It triggered the RMO and the LBV. So as someone just said, it may be getting ready to pop. My indicators say it is. And my target, again, I do want to see it pop a little tomorrow, is 176.70. If it hits that, I'm getting in, and I think it'll go up for a few days.
Thank you very much. I'm going to stand basically with Jim and Roy on this one. I think we, as Jim said, we've got support below from the 200. A break below 200, a break below and hold below the 200 moving average. That is going to spell a little bit of near-term doom for Home Depot. But right now it's being supported by that 200-day moving average, and it's finding resistance up at that 50-day moving average, which what Jim was saying was right at the 180, maybe a little bit above that 180 level. So it's kind of creating its own little rectangle box between those two. So being also that Roy's indicators have kind of put together a package that said it's looking pretty good to the upside, and I'm looking at momentum. Momentum actually ticked up the last 2 days, ticked up really nicely in the last 2 days, and it has actually thrown a pretty strong buy signal as far as I can see. So I'm going to err to caution, and I'm going to go along with Roy on this one. And that if we continue to see a little bit of upside, it's time to get in. At least then, you're going to be able to test and see if it's going to break that 180 level and break above the 50-day moving average. And for it to really be a breakout, folks, it's got to break above it, come back down, and hold above it. As long as it does that, then I think the stock is in very, very good position to begin its next rally phase. And that might go contra against what the majority of the market's going to do. So it'll be interesting, and that's going to be something to see. Now, I'm going to kind of rush things up. I want to go over two stocks that were brought, or one's an ETF, one stock, that were brought up in discussion. And so the first one's Apple. So if we could just take a quick look at Apple, and I'm going to start with you, AJ. And let's Give us your pearls of wisdom on Apple, and you're muted.
Just very quickly on Apple. Apple is also very much a driver and also a follower because it is such a big player in some of the ETFs. So it's got correlation, which means when other things go up, Apple's going to go up. When other things go down, Apple's going to go down. And Apple can also lead that. With that said, I haven't been trading Apple in a while just because of where the price is and where the uncertainty is around Apple. So I don't have much more to say to that, although besides it's just not on my radar.
Great. Thank you. And Evan. Apple.
All right. So Apple is one of those drivers. Of course, it's like the tide that lifts all boats or sinks all boats in the harbor. You're looking at the daily here with the US dollar overlaid. And I want you to kind of look at, squint. Right here's the head, this long tail down into below 150, shoulder, shoulder. And the 165 level was key in holding. And it no matter what we tried, it couldn't close under that. And then the buyers came back in, and it's thrown the price back up to where we are within, I'd say, spitting distance of 180. So like the Microsoft chart, we've kind of got this candle that's exaggerated the last 2 days. Question is this going to continue up? I don't know, but bringing over this line that was resistance in February gives you a greater idea to where if, say, this inverse head and shoulders does break out, this is the neckline at 180, and the target would be, 183 or 185 plus, bringing it up, right up here. So that's what I got in Apple.
Great. Thank you very much. Jim.
Apple had been in a bit of a range here this year, 180 ballpark, 150, and it just had a correction, and now it's trying to launch in advance. If it breaks through 180, it's going to really go. Probably also would be mimicking whatever that S&P and NASDAQ is going to do. If these indices roll over by the end of the week, then I would think Apple would be part of that rollover. And if these indices don't roll over by the end of the week, then we could take out the 180. And get moving towards what some people have predicted is, based on their earnings potential this year, a $200 stock.
Okay, thank you. Roy?
Yeah, let me see if I'm on mute. Am I on mute?
No.
No,
okay. Then I can say no, and you'll hear me. I'm not seeing Apple. It didn't trigger any of my indicators.
Okay.
So it's just not.
I think I know why your indicators are telling you please stay on the sidelines in this one. Apple, as already been mentioned, is a big part of the NASDAQ 100. It's not as big in the S&P or in the Dow as it is in the NASDAQ 100. And then, of course, you've got a myriad of ETFs like the triple Qs, et cetera, that also Apple is a big participant within. The move off of the mid-March lows at 165 is not bullish to me. In fact, I would say that it's finishing momentum while still kind of, pointing higher, I think is waning. I'm a big fan of Apple. I just bought the Apple X, and the iPhone. And all my computers are Apple. And so I think their products are fantastic. But I think, once again, because it falls prey to being into everybody's index, as we've said, if the index goes up, so will Apple. If the index goes down, so will Apple. And I think if the market turns, which I do believe generally is going to happen, then this stock is going to go with, regardless of what is said. And we'll have to wait until their earnings report to really have a gauge on how things look for Apple. And by that time, who knows where the indexes will be. We got time for one more, and we talked about it, and I'd love to hear what everybody has to think or say, and that's the spiders, SPY. So, AJ, hopefully this is one of your favorites. I want to hear what you got to say about this puppy.
Well, I got to tell you that when I think about ETFs just in general, I like to use them to get a barometer of what the heck is happening, but I don't trade my options against them, and that's just because their movement is very, when you think about it, it's very much, there's definitely no fundamentals driving them, right? There's what's happening in the macro market. And so it's really hard for me to do any more prediction based on my fundamental analysis. Now, based on technical or even quantitative analysis, I can play around. The market's moving sideways. And if I was to trade the spiders, I would trade them. In fact, they're in a perfect position right now to do an analysis for you to be able to trade them either from the downside or I like to leg into my premium trades. So if we hit a top, you could definitely short something and then sell a put against it or buy a back month put. If you wanted to wait it for a full cycle like we had from the middle of January to the middle of April here, you could do the opposite. But I don't like things that are fully their price action is all about what's happening in the news. I like there to be at least a base in some sort of company behind it. So that's why the ETFs have never been my favorite.
Thank you. Good one. Evan, spiders.
Okay, so looking at the daily on the spiders, I like to equate things with what's going on in the dollar, higher elevation. So what we're looking at, we've had from May of last year, we had a rally, but the dollar was coming down. They reconnected in September where we had the dollar rallying with the market. Market kept rallying, but the dollar fell. And then eventually the bottom fell out of stocks. And since that point, as you can see down here, this is the DXY. We've been consolidating. We're at the lower end of that rising uptrend off that multi-year low in the dollar. Question being, is the dollar going to rebound? And energy is kind of speaking to that already. And if it does rebound, will this movement that we've seen in the S&P 500 and the Nasdaq and the spiders here continue higher? I'm in the camp where the dollar may bounce, market's going to come back in, we're going to consolidate a little bit more, and then as you can see here, we put in a lower or a higher low versus the prior low in February for the year. So come back down, maybe test 260s, and then I think we're going to try to retest 280s sometime in the summer if all goes well, if Trump doesn't tweet something too crazy. That's my view on the spiders.
Okay. Jim.
Well, basically, you got earnings, you got buybacks, and you got tax cuts, and all of those three things are very bullish. The question is how much of all that has been discounted in January when we moved up towards 2,900 on the S&P? Right. And that's the question that we're going to be finding out probably sooner rather than later. As far as I can see, my opinion is that the long-term bet on stocks is still up. But my monthly long-term averages come in between 2,400 and 2,450. So that could mean that we've got more trading range environment ahead of us as the averages catch up to the parabolic move that happened in January. So basically, again, this 2,700, 2,750, 2,730 area ballpark was an area that I thought it might rebound into, but I also thought it could roll over from there. And we're going to, I think, have a better idea by Friday if that's in fact going to occur. And again, as I said earlier, the transport's rolling over today, the Goldman Sachs opening way high and then really giving it up. These are things that make me feel like it's possible we're going to roll over from this neighborhood. As opposed to see 2,800, 2,850 or something like that. So, with the long-term averages on the monthly way down 2,400, 2,450, whatever they are, we're still, in a little bit of rarefied air up here at 2,700. And so the likelihood that we could see more back and forth action, digest that parabolic move that happened in January, that whole thing that we have been going through may continue further if we don't take out this area that I just mentioned.
Thank you very much. And Roy. Roy?
I think we lost him, but I think he's logging back in.
I'm back.
Hey, Roy.
I'm back.
Spider.
So, yeah, when it comes to the SPY, you know, again, they just don't move quickly enough for me in my short-term orientation of, you know, 1 to 5 days or so. But I do trade the leveraged fund. So the SPXL is the leveraged spider, and that actually looks good for the next few days. I think it's at 44.9 today. I think if it hits about 44.55 tomorrow, I'm in. It figured some good indicators for me. And again, that's just for the next few days.
Okay. Spiders to me, again, like so many of the indexes in the other markets that we've looked at already today, off of the low, just below 255, which was at the end of March, it looks like. It's corrective, it's small, it's tight, it's pushy, and so I really do not favor being long the S&P, the Dow, the NASDAQ, the spiders, the Qs, anything that kind of gets wrapped up into what makes all these indexes go up and down. I couldn't begin to tell you what the news will be, but then you could pick one of a multitude of things that come through, and they really just kind of shake the market up, and they'll fulfill, which was a corrective phase that began off the highs. Once that's complete, then it's like dive in, double fist, and everything you can grab, that's going to be me. Because I do believe that once the corrective phase is over, we still have a very large rally yet to take place. And I'm talking about a rally from wherever this thing bottoms out to new highs. So I think patience is also going to play very big here. But if you want to go out and get long in the spiders because you believe it still has some upside, don't be afraid to hedge that trade. Don't be afraid to put puts underneath it. Don't be afraid to sell calls against it. Whatever you need to do to protect yourself against a sudden turn and a sudden decline. Having said all that, that brings us to the conclusion of what we're going to talk about today, because we're now just a little bit over. Give one more shot, round robin, and just AJ and everybody else, tell us again who you are, where you're from, and how we can get a hold of you.
Yeah, fantastic. So this is AJ Brown, and I do have some white papers for all of you nerds out there who want to read some stuff. I've got 4 white papers, and you can just go to TimingResearch.com. No cost, no nothing. Just download them, read them, enjoy them. And if you are interested in the premium trading, please visit me. We're running a special right now until we fill up the seats in our program, optioninvesting.org/special. And come be part of our premium selling program for the next 6 months. All kinds of perks there. So those 2 websites, tradingtrainer.com and optioninvesting.org/special.
Thank you very much. And Evan.
So I've ran Hedge Accordingly for about 10 years, and it's primarily a news aggregator, breaking news, finance, and mixing politics with finance. I've had a sister website, Trade for Profit. Some of you might have been familiar with it. It was a free chat that I ran for years and kind of lost interest in it. And now I'm resurrecting it as tradeforprofit.net. So once I get that chat live again, and hopefully I'll get that community going. But to find me, you can find my stuff on hedgeaccordingly.com currently.
Great. Thank you very much. Jim.
Oh, basically, as far as optionprofessor.com, if you'd like to learn more about the uses and risks of the different option strategies and brush up on some of the information that might come in handy, just go to optionprofessor@gmail.com and something can get sent out to you.
Great. Thank you very much. And Roy.
Yeah, hi, I'm at steadytrader.com. And we have a free book there. If you want to go there, it basically outlines our entire approach and philosophy. As I've said a few times, we get in, we get out several times a week, rinse and repeat. Small bets on high probability trades moving up.
I love it.
Thank you very much. And for me, again, I'm Michael Filighera with logicalsignals.com. I've been in the process of helping one of my former room attendees get her own room going. And again, I just want to state that this is basically a trade room. It's for everybody, but it's for those who might be with a smaller account. And I'm talking about as small as $5,000 up to maybe $10,000 or $15,000 in the trading futures. And what Natalie, that's the room moderator, she is extremely good at risk management and making sure that we do that, and also how we control it so that we're continuing going to be profitable versus giving up large sums of our accounts. Now, right now, she's running a special courtesy of me for new members in that trade room, and you can go to candlelighttrading.com. Have a listen to any of her recordings that she has on there. But if you have an interest in joining the room, you can get in by using the code LS100. You'll get a $100 discount off your first month. So that does it for today. I'm going to turn it back over to David. And thank you very much, David, for letting me participate again today.
All right. Thanks, guys. Great show. And just a reminder for everyone watching, be sure to hit the YouTube subscribe button if you haven't yet to get updates on future shows. Also, be sure to join us for both shows next week. Crowd Forecast News will be back on Monday, April 23rd at 1 p.m. Eastern Time. And the next episode of this show will be on April 24th, Tuesday, 4:30 p.m. Eastern Time. And I just want to thank my guests again for this week. Evan McDaniel of Hedge Accordingly, hedgeaccordingly.com. This was Evan's first time on one of the Timing Research shows, so happy to have him here.
Happy to be here.
Jim Kenney of OptionProfessor.com, Roy Swanson of SteadyTrader.com, AJ Brown of TradingTrainer.com, and Michael Filighera of LogicalSignals.com. Thanks, everyone.
Thank
Take
you.
care.
Thank you. It's fun.